Lunch and markets in good stead. In fact, Nifty 50 gaining. But let's get you an interesting insight on the comparison between investment in the hotels versus investment in hospitals. Who would have thought about this comparison? Mangala Malu is right here with all the details of that interesting report. Mangala.
Well, it's an interesting note which has come in from Jefferies this morning, and it compares hotels and hospitals as investment options. Now, intuitively, these are as different as minibars and medicine boxes, but they do have a lot of similarities if you just take a look at it from the business standpoint, because both industries belong to the service sector, have buildings and rooms for which they share similar key operating metrics like average revenue per occupied bed or average revenue per available room, and occupancy, capex per bed or room, EBITDA per bed or room. And for both these businesses, what differentiates them from their competitors are location, quality of experience, as well as building rooms or beds. Now on to the differences in these two. Of course, we know the differences between hotels and hospitals intuitively, but for hotels, it is a more discretionary spend. People willingly spend on hotels, and that's why it's partially depending on the overall buoyancy in the economy. Whereas, the other thing that they have going for themselves is that there is no dearth of quality manpower. Whereas hospitals are concerned, they are unaffected by short-term economic activities, and they are more driven by clinical excellence. And of course, the biggest challenge they face is that there is a limited surgeon pool. I guess it's easier to train someone to make a bed than to perform brain surgery. So let's talk about the revenue and EBITDA CAGR projections for both these industries. Between FY23 and FY25, hotels are expected to grow in about 10 to 23% revenue, 14 to 34% EBITDA. Hospitals between 10 to 14%, and the EBITDA grows at a measly 11 to 16%. However, in terms of return on capital employed, and that's where hospitals beat hotels, they have a higher range of almost 8 to 27% as against hotels, which are 10 to 11%. And the biggest reason for that is hotels have a daily rate of anywhere between 12 to 15,000, accounting for all the cyclicality, whereas at a multi-specialty hospital in a metro, the rates could go all the way up to 75,000 as well. So hotels grow faster in up cycles, but hospitals are a lot more consistent over a long period. And perhaps that's the reason that, when it comes to valuation multiples, hotels have a range of 12 to 20 times, which is a little less than hospitals, which are 14 to 21 times. So what should you invest in? Jefferies suggests that if you're looking for the short-term growth, hotels in an upcycle, that's the place to be. But if you're looking for consistent performance, superior ROC over the long term, hospitals, that's what you're supposed to do. And that's what stock returns are suggesting as well. If you just take a look at the short term, over the last 12 months, the hotel stocks, Indian Hotels, Lemon Tree, they've beaten, the returns of Apollo Hospitals and Fortis, both of them down 7 to 8% as against the others, which are gaining. But if you just take a look at the long term, the biggest hotel player and the biggest hospital player in the country, we've seen the hospital player outperform by about 300% in terms of gains over the last 5 years, whereas Indian Hotels is done 137%. So finally, just don't mix up your stocks with your pill bottles. So if you're looking for some top picks in this space as a portfolio, Jefferies recommends Indian Hotels with a target of 380, Medanta with a target of 630, and Max Health with a target of 530. So that's hotels and hospitals.
All right, Mangalam, thanks a lot for getting us all of the details there. We've all definitely been talking about it, right through the morning. Very interesting note coming through. A little bit of a strange comparison, but, interesting note.
But I would say that the biggest difference between the two, not in terms of investment, is that nobody willingly checks into a hospital.
Which is why it's a strange comparison, right?
Yes,
exactly.
Yes.
But that is Jefferies.